This catches up on my screen. There we go. Okay, so we are going to talk about the market analysis. So, like I say in the reference sheet, like this could be a whole separate training, well, in itself. So, this is just an overview. This is just a tidbit. Like, this could be its own whole separate training. This is just what I do, and I'm going to give you the short version of what I do when I'm making a comparative market analysis. Okay. So what you want to do is choose homes that are as close as possible in their age, style, and location. The time it's sold also, of course, matters too, but I find it's easier to do an adjustment on timing than it is to do an adjustment on age, style, location. So for sold properties, the better they are, the closer they are, the fewer you need. So let's just say you've got a 3 bedroom, 2 bathroom bungalow. It's in a neighborhood and, several of this style of homes sells every year. You only really need 4 good sold properties to give them a good idea of what price is going to be. Okay. So if though you're in an area where the homes are more unique or maybe it's more rural, you I would just make it a wider area. So I would go as far as I needed to go to make sure I could get some similar homes. Again, it needs to be the same sort of feel of a neighborhood though, because if it's the exact same home and it's in a really desirable area, it's going to be a lot more money, right? So location, like as close as possible, as similar a neighborhood as possible. The age, I try to get it at least within 10 years, like 10 to 15, 20 years, like maximum. Uh, right. But like I say, the better and closer the comps are, the further you need. So you need to go. So if you can't find good comps, like choose more homes so you can show them more variety of properties, if that makes sense. So pick some sold properties. Next, you want to pick a couple active properties. So you want to explain that these homes would be our competition. Okay, so but tell them that it hasn't sold yet. A seller can technically ask whatever they want, but why you're including these is you don't need to use these properties for data. But what you're going to do is just show them like, hey, this would be our competition. So if we went onto the market tomorrow, these properties, buyers would check out these properties as well. Okay. So they're not as data, you're just showing it to them. And then this one I really like, conditional sales. If there are any homes that are conditionally sold, put them in the report. Let them know you're going to keep an eye on these. And this will help know the outcome. Like once you get the outcome of the sale, it's going to help them determine their price. So tell them you're going to do that for them and you're going to be following up for them. So you're showing professionalism, you're showing the follow up, you're showing that, you know, you're showing that you're keeping an eye out for them, you know what to look for, and you're watching the market. So I do that a lot. In terms of pricing, like I'm not going to get into adjustments and, location, but generally you're going to make adjustments for overall condition, larger upgrades, landscaping, size, extra bedrooms, bathroom, location, lot, right? Those are the big ones. And like I say, I can't go into that here because every market is so different, right? But those are the things that I typically make adjustments for when I'm pricing something out. So, depending on the price of the property, so if the price of the property is like, I actually went to go see a client's home today. It's a starter home. They've been there and they're going to be selling it for around the $450,000 mark. So we were talking about listing it between 450,000 and 460,000. So we're hoping though there's about a $15,000 to $20,000 range. So there's less of a range because it's a lower priced home. If I'm pricing a home, I'm just thinking of one that I priced last year. The range I gave was 1.125 million to 1.175 million. So that's a bigger range. It's a $50,000 range, but the price of the home is quite a bit more. So for me, the range I give really depends on the home itself, the price range I'm in. The other thing to keep in mind when you're giving a range is think about when they're going on the market. So, like, let's just say you go see someone right in December and it's super quiet in your market. They don't want to list till the spring. You could just give them a best case scenario number and say, like, this is where I want to get you. We'll have to reassess what's happening in the market at that time. But sometimes just giving them that bigger number, saying that you're projecting into the spring, of course, you will have to reassess at that time. That, you don't want to crazy overinflate the number, but it's helping you and it gives you a little bit of margin of error too. When you're doing your pricing, and it can also sometimes help you actually get the listing just by giving a range. And then when it gets closer to the time, of course, they're going to want that higher number, but you could just say, hey, based on market conditions, these homes just sold for this price. I'm really thinking we should go in the middle of that range. So those are my tips for pricing. Like I say, this could be a whole other training in itself, but those are my best tips.